Hey traders, and welcome back to some market insights with yours truly, Richard, serving traders responsibly here with Orbex. Today is the 31st of January. It is 10:29 a.m. Eastern European Standard Time, and it's the day after the Federal Reserve meeting, the FOMC meeting. What happened yesterday? The FOMC, the Feds, they kept the interest rates the same. Basically, the bias was for a wait and see game from Chairman Powell. So this is not really surprising because let's say, for instance, in the previous video which I did for the FX majors, I mentioned that possibility for the dollar to actually a possibility for dollar to basically crash, let's say, and you can actually see from this previous video done last Friday. By the way, another one is coming tomorrow for the FX majors. And I'm going to basically host a live session during the NFP, the non-farm payrolls as well. So you might want to check out the description in the link below. Now, let's say, for instance, right then I was actually expecting a possibility for the US dollar, basically the dollar index right here. This is the 2-hour chart. I was expecting for this to basically start a bearish impulse, which actually occurred and started developing. Now, the point is that what I'm going to do today is I'm going to cover only the euro dollar and the side effects of this Fed meeting. So let me just jump on the euro dollar daily time frame right here and notice that it is actually retesting this very, very important trend line, upper trend line from the descending channel. So in other words, a breakout could actually be possible, which would be very, very supportive for the euro itself against the US dollar. Okay. However, it does need to prove that. And for that, for us to get more details, we'll zoom in to the 2-hour chart later on. But let me just explain to you guys what I'm actually seeing here. Now, in the quarterly report released, let's say I'm actually mentioning these possibilities for the euro dollar to start a bullish impulse. And you might want to check the description in the link below for the download link. It's a free download, by the way. So knock yourself out. Now, in the meantime, let's say, for instance, I'm seeing this corrective structure right here in a B wave. And this could lead towards a bullish impulse, let's say, for instance, in a 5-wave sequence in wave C, minor C, blue. But also, this could be the structure in an expanding flat for this B wave, the red primary degree B. So, in other words, if the C wave would actually go towards the upside, right, there is a way, obviously, to measure this by measuring waves A's and basically the correction tops and bottoms, right? Let me just put all the fibs there so you guys can see the levels. What I mean by that is basically, let's say, a breach of the 100% from A to B on the Fibonacci extensions could be very positive. It could gain support here. Okay. However, what I would expect is a support right here on this trend line. So a structure like this will come in handy. Now, if it breaches this and it really continues, the 161.8 would be basically the next focus, which is basically the next resistance from the previous tops. However, right, from the descending, basically all this trend line, basically the wave A, primary A, red, I'm seeing this possibility as a vibration zone because it reflects the 61.8, 50% Fibonacci retracements of that wave A, primary red. And this B wave, if it is an expanding flat, and we would actually basically witness a rise and a rally in wave C, thus terminating, basically finalizing this structure, it could actually bump its head right here, and this could actually resemble a head and shoulders formation for the euro dollar. So the bias is still bullish, right, as per the Q1 view, the quarterly report. Now let's just jump on the 2-hour time frame and let me just show you guys what I mean by that. So as you can see, I am actually labeling the rise in an impulsive sequence, which could actually present an extension as well in this third wave here the free of free is basically the rally inside it. That's what makes an impulse, right? So let's say, for instance, we have wave one green, wave two in a zigzag, right? Very nice structure right here. It comes in handy in a wave two. And we have what happened basically yesterday on the FOMC meeting. On basically they kept the rates on hold, right? So they're wait and see. There's no need to raise rates anymore, and so on, right? Now, what I'm seeing in this minute black is a possibility of a leading diagonal, and a structure such as this, a zigzag in this minute too, would be very nice to see, because that could pave the way for more upside for the euro dollar. So personally speaking, I don't really think that this is the time. As I said previously, I don't think this is the time to give up on the euro. As you guys can see, euro still has some power, some hidden powers right there. So that's basically enough for today. Until next time, as I like to say to all my traders, stay in the green and many pips ahead.